Hi everyone, my name is Piterpakulski. Today we'll continue creating financial model of a yoga studio and or yoga classes from scratch. If you find this video valuable, you may give us a like, subscribe our channel. Also, you can order financial model from scratch for your unique business idea. And we've created the revenues for the typical year. We've created direct costs for the typical year. We assume that we want to start our operating activity in September 2022, for example. But the problem is that in majority of businesses, when we start the operating activity, when we open our yoga class, we won't get these planned amounts of revenues and direct costs right from the first month. We will just climb this revenue step by step. And we have to create some algorithm that will allow us to play with inputs with the speed that we reach the revenue that we want to have as planned. And in this video I will show you how you can create this algorithm and what capabilities does this algorithm give to us. When we create the cash flow statement, we will be able, inside the cash flow statement, using this algorithm, we will be able to see the operational losses that you need to finance additionally to the investment plan, and you will be able to see the total financing needed needed for your business more accurately, because the amount of financing is a total of financing needed during the investment stage and financing needed during the operational losses stage. It's after when you start the operating activity. So just when you open the doors, during the first, for example, 1, 2, 3, 4 months, you may have some losses, and you also have to finance it. So what I will do. So I will just create a new block of inputs. I will name it just reaching planned revenues. So we start our operating activity in September 2022. So our period when we adjust the speed of reaching the revenue, we will have 12 months period. So what I will do now, we just have to create the automatic 12 months period after this moment. I will just create some additional table. So now I will just use the VLOOKUP function. I will search this month inside this table. I will need the second column. I will need exact match. So September is the 9th month of the year. So now we'll just create the cycle of month numbers inside the year from 1 to 12. So now we will have to put the month name according to this number. I will use VLOOKUP function. I will search this month number inside this table. I will fix this table this time. I will need the second column. I will need exact match. So as you can see, here we have the name of the month. Then I extrapolate this formula to the right. So now we have the month. So now we will do some actions with year. So now we've created the chronology for our algorithm for reaching the planned revenue. So here will be the place where we will put the data, the percentage of reaching the planned revenue. So for the example, during the first month of operating activity, we will have just 10% of our planned revenue, then we will have 20% and so on. So for example, just on the 13th month of operating activity, we're just gaining the amount of revenue that we planned, for example. And when we will create the cash flow statement, we will play with these numbers to see the gap between the minimum and maximum amount of operating losses. So, and now we have to place these numbers inside this table to make them start from September 2022. I will just insert the line here. So now we will assign these values to the certain month, number month, B, then C, D, and so on. So now we can see, if we move from left to the right, we will be able to see that all these values are assigned to the certain month. We'll just press enter. Now we'll extrapolate this formula to the right. And now we can see how these values are assigned to these months when we start our operating activity. If we displace the start of operating activity, for example, to May 2022, we can see how these values displaced. And now it's time for us to place all these values of revenues and direct costs inside the timeline and assign these coefficient. So the first step will be copying, so first of all, we just create the typical year and extrapolate it to the whole of our timeline. And the second step will be adjusting, adding this coefficient, reaching the planned revenue to these values of revenues and direct costs. So what I will do now, I will just take these values and multiply it on this line. I will fix the line inside this formula. So, and as a result, we will have our revenue and direct costs started from May 2022. You can see, and they are slightly rising, so we will be able to see inside the cash flow statement the amount that need to operating losses.
So now we are finally ready with revenues, and we are finally ready with direct expenses. Later we will place them inside the cash flow statement, and our next video will be devoted to investment plan, stable investment plan. I will show you how you can do it another way. So if you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order financial model from scratch for your unique business idea. So see you next videos. Thank you and bye.